let me go over this real quick. I'll make sure the 3 sims not covered. I want to make sure we go over this real quick because it shows you the 5 SymRenko trade setup. Today's trade on crude oil fell 150 plus ticks. Some of you guys emailed me on what a double arrow means. What a double arrow means right there, caught that high, over 150 tick drop from that level, right around 150 ticks. A double arrow and a double triangle means there's a huge order imbalance in the market. So if the market has not moved already in the morning, typically you want to see double arrows early on the move, around 7:45 to 9 o'clock in the morning. If you do see that, make sure you're aware you have a potential large move. It's typically around a 40, 60 on average, sometimes $1,000 trade. So we're looking for a $400 to $600 trade, but typically you're right around the higher end of that number. So it can be over $1,000 trade if you see double arrows pop up on your 5 SymRenko in any market whatsoever. Any market that pops up, you want to see that. You guys have been sending me your charts that have the double arrows on them. So make sure if you do see that, that's what that means. And to answer a lot of your questions when you saw that yesterday that happened in the market. All right. The other thing is that I get questions about this a lot. You'll see this signal here had the arrow but no triangle, and the signal right here had the arrow with no triangle. All right. But I see an arrow with the triangle here. What's the difference? The difference is these two will have an order imbalance where the other two did not have an order imbalance, so they're higher risk trades. These two, that's the best you can get. If you get a double arrow, here's a double triangle, here's a single triangle. That means there's a major order imbalance in the market, and they're trying to mark the market lower. So when you see those two trump these two right here because there's no even triangle that comes up. These will get stopped out with just an arrow without the triangle. They get stopped out where these have a higher probability of success because you're getting an order imbalance that's happening after the arrow comes up. What you have to remember is the Fibonacci dots tell us the area where a possible short's going to happen. So the Fib dots caught really every single area where the retracement is going to try to get us in. And then the arrow will tell you it's a possible Elliott wave, short or long, ABC pattern, long or short. And then the triangle tells you when there's an order imbalance for entry. So make sure you understand that. The Fibonacci dot is the area. On your own Ninja Trader, whatever market you're trading, you'll have an alert system that goes off, a little beep. The arrows are set up that you're possible in a 1, 2, 3 pattern long, 1, 2, 3 pattern short, or ABC. And then eventually the triangle shows you that you have a possible order imbalance. Okay? So that will really help you decide when I'm trading these different markets. If I'm trading JaySignal, there's no better time to look for a signal than when you get the Fib dots that pop up with overall trend direction. That's your best time to look in. When it rolled back long inside of it, the same thing. We had an order imbalance, so it fell 150 ticks down. That's the first JaySignal, got back inside market profile, actually up here. You can see we had order imbalances 3 in a row. No matter which one you took, you made money on. Every single JaySignal on the 5 SymRenko worked yesterday. I mean, look at that. 1, 2 on the tops. Don't let it come all the way down here and try to catch the lows after it fails 150 ticks. Don't try to catch, don't be a bottom fisher. If you look at these inflection points that it caught. Got back inside of LVA for the counter wave up. Then she shot back up. So it pushed down 150 and went up 100, over 100. Almost 150 actually. 100, 150 down, and then almost 100 up. So you had 250 tick potential yesterday on crude oil. 250 tick trade on crude oil, potentially a stay on crude oil, just upon a couple setups. Now the setup I just told you about, let me show you the pull-in bar. Like I said, it was scale early now. Here's a setup. I told you wait for the pull-in bar. You can scale early. This is a number one trade and see if the runner can hold. There's your exact entry. Everybody get their first target off on the trade I projected out for you. Who's off on the first off gold? I mean oil. Mike, you off on the first? The reason I said that was a number one setup coming, the moving average magenta's up, angled up. I know it's trying to hook down. But I said the first test of LVA you buy. Who else got on crude oil long? Give you about a 10-minute heads up on it. Who else got the long on crude? Good job, Todd. Here's the LVA at 49.75. Very simple. Here's 49.72. Very easy. What you do when you come in with 2 ticks, maximum 3 ticks within this level of LVA, here's a low value area right at this level. On the black charts, you wait for a pull-in bar. The only pull-in bar we have is a doji or spinning top. We don't trade off any pull-in bar other than a doji or spinning top. The spinning top is in blue. The doji is a plus sign or a cross. Once it came within 2 ticks, there was my doji spinning top. Never closed above it. Wicks don't count. Never closed above it. There's my spinning top. This one doesn't close above it. This one, the body of the candle closes above it. That's your exact bar, entry bar off the black charts. That's the exact bar to get in. That is a qualified setup because look at the angle. The market's been in an uptrend all morning. The reason I said to scale quick on this one particularly is because look at we're starting to hook over now. The magenta's starting to hook over with the white moving average. Doesn't mean it's not a buy signal because you have to look at the body of the work. The body of the trend has been up since around 2:33 a.m. this morning. Look at this angle. Big angle. Had a number 3. Here's your deep retracement. It's a very easy setup for me to buy this. It's a no-brainer to buy this with the pull-in bar, but you just got to scale first because you have 2 times confluence. You have price profile at 49.75 here on the black charts. You have volume profile 49.72. When you get below LVA like this, it doesn't confirm over here on the Ninja charts. You just want to make sure you scale early just in case this thing wants to roll on us. So you never want to be holding the bag if you're doing 4, 6 contracts, 2 contracts, 3, whatever. You got to make sure you scale into the 8 to 10 tick target and see if that runner can hold. If it can hold, you potentially go all the way back to 32 HVA. So that's called a number 1 setup off the black charts. Very easy. I only got 2 setups called a number 1, number 3. We had a beautiful number 3 at 5 a.m. this morning, and we had a number 1 that just hit just now that I gave you guys heads up on when I got on the mic. Okay? JaySignal will always be against the number 1 trades on these black charts because it's a deep retracement. We're trying to catch a V bottom, V top. This is a V bottom. V bottoms and V tops are categorized just like that. All right? That's an easy first target hit on that projection that on that projection. Gold's coming up. Look for a 1230 short coming up on gold too. Watch for gold, 1230 short coming up. All right? So what you do in the black charts, Gerald, before you shut this off, the first thing you look at, very simple to trade. You can go on the bottom right under documents. It says how to trade the black charts. Magenta moving average is up. We buy the first test of LVA. You got to have a pull-in bar, though. The pull-in bar is a doji or spinning top.